And so the big story is that there's a spread, in the U.S., which is exchange for physical, and so it's essentially if you have uh, metal and you want to sell the metal and buy forward, that's how that price is quoted. But people are doing the other way around. If you have a futures contract, they want to take delivery of that metal in the U.S. so that they're through the tariff window you know, before the window slams shut. They can't take a $750 risk on a trade that's getting, the spreads have gotten, bigger. They could be 30, 40, 50, $60 in some cases to bring gold into the US, but nowhere near enough to take that kind of $750 risk. So that's what's been going on. It's been playing havoc with certain spreads, EFP, for example. Meanwhile, the basis is fairly high. The basis is the incentive to put on more carry trades. So there's parties putting on carry trades, and then they're trying to figure out how to de-risk it by, importing the gold. They'd rather sit on spot gold in New York rather than in London, because then if they slam the tariff, you're through the window, right? And so, huge amounts of gold moving into New York. And it's interesting, if you read Twitter, there's a lot of people that are trafficking and stories. I love this. If you look at gentleman amnesia, so it's the phenomenon to describe. People read a story on page one of the newspaper, which is absurd, and they think, oh, these guys are idiots. And then they forget that. And on page two, they return to full credulity and they absolutely trust whatever they read on page two. And so if you look that up, there's a quote from in the Wikipedia entry, I think, on gentleman amnesia from Michael Crichton. And he's talking about, this phenomenon. You read this newspaper story, and he says, it says, wet streets cause rain. The newspaper is full of them. And so there's all these sort of wet streets cause rain kind of stories about this. Now, this has something to do with repatriating, the United States gold. Because they've read about, Germany's repatriated gold and other central banks have repatriated the gold. The U.S. government has all of its gold domestically in the U.S. There's nothing to repatriate. It's already here. So that's absolutely absurd. And then, that's because they're planning a new gold standard and they want, the gold in the United States to back to gold standard. This isn't gold that belongs to the United States. It ultimately belongs to the guy who buys the futures contract, right? So when we get to that a little bit, in in the gold markets right now, and you say, what's going on? The retail coin and bar buyer has really gone on hiatus, for a variety of reasons, as the price has gone up, right? So they're price sensitive. They tend to not like to buy at all-time high prices, especially, they hit this long bear market from August 2011 through, at least 2018. That was a sell the blips market, not a buy the dips market. Every time people bought the blips, they got punished. All the usual suspects, every time the price of gold would blip, all the usual suspects came out and said, that's it. That's just the rocket ship takeoff. Buy gold while it's still 10. There isn't going to be anywhere, all that stuff. Everybody who bought on one of those episodes, for trade lost money. So after a while, I've trained the dogs, this is what's going to happen. If you buy, when the price goes up, you're going to get cream. And people are still trained. That training still rules their psychology, I guess. But we're in a different market now. And for the moment, excuse me, retail buyers in the West aren't believing that. They've kind of gone on hiatus, or even they're selling back. The dealers are I wouldn't say swamped, but the dealers are definitely dealing with sellbacks. But there's other markets where, people are still buying gold, and the leveraged speculators in the futures market and momentum traders, if they see the momentum, they see the price chart. And so they're into the trade. And so what happens is they bid up the price of futures relative to spot. Spread gets wider. That's the basis. The wider the basis is, the more attractive it is to those trading houses and market makers to buy spot, sell forward. And so you're getting this perfect storm of spread is wide because people are bidding the hell out of the futures to sell, to put that trade on. And then they have to de-risk it. So you get this endless stream of gold coming over. There's nothing to do with the gold standard. It's not because the nations are competing for the world's gold supply. It's not because this is U.S. gold. It's not because gold is a quote unquote tier one asset. Every time you hear that, I'm so tempted on Twitter every time I see that to just respond. You do realize that tier one refers to banks' capital, not its assets. The liability side of the balance sheet, not the asset side of the balance sheet. Like Basel III punishes banks that will own gold as an asset. It says 85% of the funding to finance that gold asset has to be so-called stable funding, which is equity or long-term bond, very expensive. So the opportunity cost under Basel III for banks to hold gold as an asset is very high, which is one reason why the banks are exiting. Bullion banks are shutting down, not betting the trade. Anyway, so gold's coming in because of this, phenomenon, this fear of, you want to do the carry trade because the basis is high. But if you hold in spot in London, there's a fear that you can get creamed with a 25% loss. So the way to risk it is to import the gold into the US where you're not going to be subject to that tariff anymore. And so that's what's going on. And that's causing all kinds of gyrations um, in the gold market in London and elsewhere. And all kinds of, rumors and conspiracy theories and beliefs that the gold standard is, they're secretly planning to reimpose the gold standard or something like that. None of which is, you know, even on the horizon right now.
Okay. So a lot of stuff going on that. And I have some questions here. It's really and I'm paraphrase. Well, I just want to put this in a nutshell. This is primarily tariff driven, correct? In your opinion?
Yeah, all that movement of gold into the United States, and by the way, it's also come from Asia. As I read a story about metal ores refinery in Singapore, and they were saying and they produce kilobars, most of their output is coming to the United States at the moment. So yeah, this is absolutely, um,
Tariff driven.
yeah.
Okay. And then on that, um, how would you explain them? You just trying to get to the bottom of stuff. How would you explain the run up before the election then?
So leaving aside the whole tariff thing, there's the whole monetary system thing. And
Right.
obvious that every currency in the world is just being abused by the issuers.
Right.
I think, first of all, we as Americans tend to focus on the problems in America because we're living in it. And also, say what you will about it, America is by far the most transparent. That is, our problems are magnified, put up on the giant, you know, 80-foot screen, um, magnified for everybody to examine. And most other countries are significantly more opaque. So, we tend to focus on the problems in the US, but the problems are global. And so, at the same, so leaving aside the whole tariff driven, the movement of gold from London to the US is the problem that people around the world are just grasping for, something to hold. They don't think it's going to go down in value. And the dollar, you can use the analogy, is the least dirty shirt. It's also a dollar world. I mean, there's one global currency, that's the dollar. All the other paper currencies are just local paper script. If I go into, the 19th century, go into a company town, a coal mining town in West Virginia, and the people there might have thought that that paper script was money. But if you lived outside that town and you just visited, stopped on the railroad stop there, you realize how provincial that was. It's a global dollar world, and the dollar is on both sides of every major balance sheet in the world. It's not true for any other currency. Um, but every currency, including the dollar, it's just obviously going to be going down more and more and more. And I don't think the world believes that, the US is going to get its fiscal deficit in order. And I know we have Doge now, and they're making some noise about it. Um, Regardless of whatever you think of the politics of it, I can say as a monetary scientist, somebody who studies money as a science, is that the deficit and the debt necessarily must grow exponentially in order for the system to hold together. That's kind of intrinsic to the design of an irredeemable currency system. On top of that, the world depends on the issuer of the world's reserve currency, which is the dollar, to to run massive fiscal deficits. This is the Triffin dilemma identified by Robert Triffin in 1960. This is how it has to work. This is how the system is wired. You don't like that? We shouldn't have a worldwide regime of irredeemable paper fiat currency. It is what it is. And so when you look at deficits at the level they're at now, and you think, well, it can only grow from here, yeah, people are starting to, in a greater way. We've had several waves, right? So after 2001 was a bit of a wake up call, and some people started to get into gold, and that began the long bull market, which is really just a bear market in a dollar, just a mirror image. It's like we're sitting on the deck of a boat, which is both slowly sinking, and there's a big storm, and we're going up and down in the waves. And we're saying, why is the lighthouse going up and down and mostly up? We got to invert that. We got to, objective, point of view. But that began, around 2001. And that was the end of, central bank gold selling. Obviously, famously or infamously, the Chancellor of the Exchequer, Gordon Brown in the UK, sold half the UK's gold, kind of marked the low point